Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's March 14th here. Um, we got a few data items here we're going to just jump right into. We'll start off with the retail sales for the month of February. So as you can see here, January it dropped by 0.1%. Forecast for February was supposed to rise by 0.4%, and it went down again 0.1%. That's three consecutive months that we've had retail sales decline here. Now, when you strip out the big ticket items like autos here, we have it went up 0.1% in January. Forecast for February was supposed to go 0.4%, kind of like the other one. Instead of going down, it actually went up 0.2%. So good news right there. So obviously, auto industry went down 3 months in a row, kind of bringing everything down, which is unfortunate. But this kind of shows you how some of these big ticket items can really kind of manipulate the numbers a little bit here. Uh, Also, we got the producer price index. This is inflation data on the wholesale side of things. So it's something we look at, but not real. It doesn't hold a huge importance, primarily because what we look at is inflation on the consumer side of things, like your CPI and PCE. So we'll start off here with this is the headline number. So we had a 0.4% for the month of January. It obviously that's a pretty big item there. It forecast for February is supposed to go 0.1%, and it exceeded that a little bit by 0.2%. Now, year over year, it did go up, and then also the core, when you strip out the food and energy, it went from 2.2% year over year to 2.5%. So that tells you how hot it was. Now, we'll touch on this a little bit, but I'll make some comments here once we see the stock slide or the next slide here in a minute. But also to kind of move it forward here, business inventories for the month of January. So December business inventories went up 0.6% and also went up 0.6 again in the month of January. So those are good items there. So stock market started the morning up higher. Now since has declined. Now to touch on that, we were talking about the PPI. It's not affecting the markets in a negative. So what the data is showing us today is that the economy is growing, but maybe not as overheated expansion as they initially thought, which is kind of easing some concerns of the Fed raising rates too much too soon. So now concerns of about possible four rate hikes might be kind of dissipating, or the concerns about those. Uh, as inflation's been pretty much in check. The PPI number came in hot, as you can see, but with yesterday's numbers with the CPI number, it basically shows us that that's not being passed on to the consumer. So basically, what's happening is that the wholesalers are eating that lower margin on there. So their costs have gone up, but they're not passing over to the consumers those additional costs. Now we may see that somewhere down the line, but in the near term, we haven't seen that yet. So, but the stock market kind of shifted gears, went to negative stance later in the morning here. So let's see how the bond market's being affected. Bond market's doing pretty well. We're up right now about 5 basis points from where we left off yesterday. We're up against this 25-day moving ceiling. As you see, we did test it here. It does become a floor of support. It has been a pretty strong floor of support. I'm sorry, not floor, ceiling of resistance here for us. So we like if we for us to get any better rates, we need to obviously break above this and have a convincing break above it. So uh, in to kind of come over. So basically no change in pricing in interest rates. So interest rates are going to remain intact from where we were yesterday. There shouldn't be any change. And as you can see, we even started the day off even lower from what down here. Here's their start rate. So we started lower and we've gone up. Let's go ahead here. Here's the 10-year Treasury. So we broke below the 25-day moving average, which has been a very strong floor of support for us. Now we have to see if this continues to be a trend, because right now we're down to about 2.81 right now, or 2.83 rather. I'm sorry, it's like 2.83. So we broke above it, and we've continued that trend downwards here. So this is obviously a good sign for us. Now we're not going to get better rates if we can't break on the bond side above that 25-day moving average. But if this can keep us below, this becomes a ceiling of resistance for us, then the other one might give in a little bit, and then bonds might get some improvement here. So until we get some certainty, I would still suggest being cautious with your any rate locks if you got out there. If you are in a transaction and you haven't locked yet, be very cautious. You could float, but be very cautious. But again, this could change quickly. As we've seen, sometimes we've gone one direction and it quickly changed within a day or two. And, so there's really no trend that got developed, or looked like it started to develop a trend and quickly reversed. So uh, that pretty much wraps things up, guys. If you guys want more data, just go over to Twitter. You can find me at Mike Bjork on Twitter. And I hope you guys enjoy the rest of your day. Thanks so much for watching. We look forward to see you guys tomorrow. Bye bye.